In the era of pandemic, many banks changed their approach for financing enterprises. For example, the procedures for granting loans were tightened. And what is interesting, a slightly different approach was used in factoring transactions when payments are secured by contractors or insurance companies. This approach gave positive results because companies' awareness of factoring product increased significantly. The companies began to notice the additional value of the product besides financing. For example, the debt collection on the side of the factor. Out in the world, everything has changed. But for banks or factoring companies, one thing still remains the same. They need to take care for the quality of their factoring portfolios. And fortunately, there are some tools that can help. And one of those tools is the early warning system, which monitors the contract behavior on an ongoing basis, detects anomalies, and passes them to appropriate risk, monitoring, or recovery department. An example of this can be catching delays in payments from individual contractors. If an average payment delay increases from 5 to 10 days, the contract operator will receive a warning signal. It doesn't have to indicate that cooperation with this contractor should be terminated. It only indicates that this contractor is worth having a closer look at. Usually, the factor finds out about customers' non-payment and other problems when the money does not come for a long time. Then, they need to start expensive debt collection process. Thanks to this information, the factor or bank may react, assuming that prevention is better than the cure. And finally, when we are talking about new customers, the cooperation with the insurance company is another advantage of factoring transactions, because the knowledge about contractors' payment culture is very important. It can simply prevent from losing money. And these are just a few examples of why right now factoring is safer than ever.